Hi traders, welcome to Admiral Markets. Thanks for joining this strategy webinar focusing on high probability setups, finding trading setups with a higher probability than usual. We'll be focusing this time on Fibonacci and patterns. Of course, even though a setup might have a bit higher chance, doesn't mean there's a guarantee. There's no guarantee, of course, for any particular win necessarily. But there are, in my view, some setups that have better chances. If, of course, you're trading, I don't know, some crazy amount of number of trades per day, then obviously there are going to be some trade setups that are just not as solid. But there are ways to filter out and focus on setups that have better leverage or have better odds of succeeding. We focused on that in the previous two webinars, I believe already. I think yes, the eighth or at least one webinar before. I think two even. And gave you already some hints at that. So if you didn't check those out, you can find those particular webinar or webinars regarding high probability setups on the YouTube channel of Admiral Markets. That's a good tip as well. But for this webinar, I want to first, before we take a look at the charts, explain these two disclaimers. Number one, the fact that this webinar is shown to a global audience, but may not be suitable for everyone. Therefore, please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if it is suitable for you. Secondly, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer, and you are aware of the risk involved when trading. All right, so before kicking off the webinar, just a quick introduction. If you are new to our webinars, basically you can sign up for more webinars at admiralmarkets.com. First of all, just go to education/webinars. You can find that here at Web Education and Forex and CFD webinars. Of course, there's not only Forex and CFDs, a lot of other instruments are available, as you can see here, commodities to indices. You can find that below products. But generally speaking, a lot of good info on the website. I know there's a lot of info here, but take your time. For instance, we can take a look at the market heat map, and I think we'll see that the euro has been a big mover so far, but we can check that out right here. You can see some of the instruments that are moving up, some of the instruments that are moving down, but also the currencies. There you go. As you can see, euro is indeed up and top with regard to the movement and also the volatility. Pound, a lot of volatility, but slightly less movement. So the biggest pairs, New Zealand, euro, and pound. All right, so well, definitely not the New Zealand dollar. That was a very slow mover, but euro New Zealand indeed moving a ton. So those three, not surprising that the euro and New Zealand especially, I think, indeed moving a lot. Pound too, as always. Dollar, what are the slowest, in fact? Indeed, that's interesting. So this gives you kind of an idea what currencies are moving. That's just one of the tools that you can find, once again, at Analytics and click on Market Heat Map, among the many other things, including analysis. Alrighty, so we were kicking off, we were at the end of the webinar yesterday taking a look at some CFDs like Facebook, for instance, and saying that some retracement could happen. Seems like price is trying to break through the support trend line as we speak, and Facebook is making a bit of a retracement. So that's kind of following the plan for the moment. Dollar index also broke support. You can see kind of made a rising wedge. I was thinking that it would make one more push up to the R2, make double divergence, but that didn't happen. Instead, it broke the support trend line. And of course, that fueled the euro dollar upside specifically, and has been moving up very strongly. We talked about that when price was at R2 and said that if today's candle holds, there could be a breakout to the upside and then a pullback. So there was a little bit of a flag here, a bit of continuation for 50 pips, now making a retracement. And let's take a look at the fibs, how far this retracement can go. Let me use a new template here. And let's take a look. I think that when using fibs, well, basically but fibs and patterns are useful at different times. I mean, fibs are very good when there's strong momentum. So in this case, definitely good for a fib, right? What kind of pattern could we see here? Well, not surprising to see a bull flag here, because in that case, the momentum was so strong. This was probably a wave 3, and this was probably a wave 4, and this is a wave 5. So the chart pattern of a bull flag made sense at that spot. However, I was expecting a little bit of a deeper pullback to 117.75. That didn't happen. So I skipped this particular flag and trade personally. I wanted to see a little bit of a downside before trading it up. I do think that there is one more upside available because just based on this momentum pattern that we're seeing here. And this should be a corrective pattern and continue higher like this. So for the moment, I think putting a fib on this particular swing high makes sense. We could also put it on this swing high, and both are our options. It basically depends. We could take a look at 15, 30-minute chart. Probably both are okay. At the moment, price is breaking through this 23.6 fib, so I think we can use the wider one from here. So when you see momentum patterns like that, they're great for fibs. And we should see a continuation around the 38.50 fib for more upside. Now, it also, one thing though, that increases the probability of that upside is that price doesn't fall like a rocket like this. Right? I wouldn't expect it personally, but you never know. If it does, then it does kind of make it questionable whether upside will happen. What I like to see preferably is price bounce at the 23.6 fib, make a correction higher, then make a correction lower, make kind of a flag like this, and then a bounce at the 38.2 fib would be good, right? In that case, or the 50 max. So what I'm looking for is a bounce in this zone around 117.50, 117.75 for the upside. And I think that's a pretty high probability setup based on the momentum play that we have here and the bigger breakout that's occurring on the daily chart. Yikes, that fib is kind of blocking it. So let me get rid of that for a second. Here we go. This was the break or bounce spot. The market says break, right? This was the candle. Basically, when price was here, I was saying that a break below support could be a bearish breakout. If we do get a break above the resistance, there could be a move to R2, and then it depends how price responds to the R2. Is there a move down? There will be a big wick at the bottom, right? If it holds, then there should be a continuation. But just because it holds doesn't mean necessarily that the breakout will fly up 300 pips in the next hour, right? These things always move in waves, always move in phases. So at this moment, we had, just based on this strength, we had an initial reaction and continuation. But I think that retracement of some of this candle is still possible. As I said, 117.50 is the zone what I'm looking for, which is around the R2 here, about maybe halfway that candle, maybe just a little bit above halfway that candle. And looking for a bounce there. Basically, 4-hour, 1-hour candlesticks here. Now, if, as I said, one more caution, if this is showing too much momentum, then I would be probably putting a fib on this swing and looking for price maybe to go down to the R1. Sorry to hear that, Angel. Yeah. What happened? Which trade or trades or what currency or instrument, I should say maybe. Gold. And we'll take a look at gold then. What maybe you want to say if consolidation, i.e. Yeah, it was a bit choppy indeed. This whole turn to the upside. We'll take a look at gold after this one. It was a bit choppy indeed. It was moving up slowly, then fell quickly down and moving up again. It's a very kind of rounding pattern, and those can be kind of like very slow before we get some impulse to the upside. Tough stuff there on the gold indeed. With regard to the $0, so yeah, I think I'm looking for a bounce. I'm basically looking for a bounce. That's just a simple thing. And I want price to make a retracement and show candlestick patterns for more upside. and my stop loss will be below this daily candle. And I will be targeting, I mean, the target, well, there are multiple targets. I mean, it depends. Of course, we already reached the kind of target for the week, which is the R3, the weekly pivot point, which is part of the MetaTrader 4 Supreme Edition. All right, that's a plugin from Admiral Markets, by the way, and you can find that by going to platforms, admiralmarkets.com, click on platforms, click on MetaTrader Supreme Edition. It's a plugin, so there's extra 60 or so features for that. For MT4 or MT5, it's an extra add-on, all kind of features, including this Admiral Keltner and the Admiral pivot points. Um, so, but it depends how you want to trade it. I might consider a long-term trade. I might consider. I'm not a big long-term trader, but with the euro dollar, I do think there's space up to 120, 122.50. Good number of pips there. If you're looking more for this week's target, then I think probably 119 might be a fair target to aim for. Doesn't have to go much further this week necessarily. It might hit 119.50. It might even go to 120 this week, but that's a pretty awfully big candle already on the weekly chart, right? If it goes that deep, that far, I mean, sorry, right? Now, if it goes all the way, just keep in mind that if it's all the way at 119.50, that the weekly candle is looking like this. It's possible, and that's a pretty big weekly candle for the euro dollar at this moment. So I think more conservative target is 118.50 is the most conservative, or 119. If you're looking to hang on towards those big targets, right, then it will probably not happen this week. That will probably take some time before that target get hit. So depends what style of trading you're used to. But the first step anyhow is the retracement and bounce, and that's my plan for the moment. I think it's a high probability setup because I've seen this, basically repeat itself time in and then again. Um, that these momentums typically see a retracement and continuation. So that's why I think it's a high probability setup. It's a typical momentum pattern and retrace to fib scenario, in my view. Nothing is ever for sure, don't get me wrong, but this is, I think, a decent chance. Yeah, I know, Angel. Money management is one of the big things, bigger actually than analysis. Um, Although I think analysis is very important, but money management is the key number one probably. If you really had to choose, it is holy grail indeed, yeah, indeed. Because the thing is indeed, as unfortunately Angel now has witnessed, is that the money management is kind of like the foundation of our house, right? Or that's a little bit big foundation compared to the house, but I think you know what I mean, right? So without this foundation, it's all of these great things that we have in the house, the windows, the doors, the roof, right? And this could be all kind of psychology, this could be systems, this could be indicators. They'll all fall down if this my drawing is gone. If this base is gone, the house doesn't have anything to stand on and collapses indeed. So it's really like the foundation indeed. Yeah, and gold is indeed very choppy and wasn't able to break, basically, again, wasn't able to break through resistance, making a flag here. And well, I was bullish on this, basically. Still am, but if the flag does break to the downside, then of course that could change things. So for the moment, break of the flag and break of the bottom, yes, could be some downside continuation. If we do get I would say on the daily chart, a break above this resistance zone here with these two trend lines, resistance trend lines, yes, then we might finally get that break to the 61.8 fib, and I would expect a turn at the 61.8 fib. But this particular spot was very, very messy indeed. Price not really able to push ahead anywhere really. Yeah, this is a range. If you want to trade inside this, it's like a range indeed, just with a slight angle, but more of a range trade indeed. And waiting for the break up or down. It could break both ways really. So yeah, we'll just take a look at some other currencies in the meantime. Basically, euro strength has been dominating since Tuesday morning, right? Um, and it's a bit annoying if you miss it, right? I was in the Kiwi weakness. I was thinking about EuroCAD, but just missed that moment and missed this euro trend in a way, and that can be annoying a little bit, especially if it then extends and extends and extends beyond what you think would be a reasonable target, and you're like, oh, I should have been that one, right? So sometimes can be a bit annoying if you miss a big trend like that. Um, I was more focused on the EuroCAD than the euro dollar, to be honest, because I thought the EuroCAD had more potential than the euro dollar because of the resistance zone up in here. And indeed, the EuroCAD did fairly well. I think the next trend, I think the euro dollar, my point is though that I think the euro has had this boost up now, and I think it's going to go into kind of some corrective mode again. I think that in a way it's almost as if the currencies are waiting for each other, right? One is moving. So the week started with Kiwi weakness, basically, right? So I traded that against the yen and the dollar, uh, not against the euro. The euro New Zealand did actually better because after Kiwi weakness started, euro strength kind of gained steam, and the weakness of the Kiwi still continued, but it was less dominant in a way. Now I think that the euro, there's a good chance that the euro might get into some corrections, right? We see the euro dollar move a little bit down, then euro yen is kind of heading, it's not kind of seeing that follow through. As you head to the upside, it's kind of like stalling at the 78.6 fib. Um, so I think the euro might get into a correction, and this is maybe sometimes what happens is that if you miss a trend, like we miss this euro trend, we maybe as traders kind of try to catch it or jump in later, just as maybe as the correction starts. And I'm not saying that the euro trend is over necessarily. I think that, as I said, the euro dollar has some potential to continue after the traces, and I think that could be valid for the euro odd too. I traded this euro odd on Friday from here to here on 50 pips, um, which was okay, but of course, yeah, went a lot further, and so sometimes these things can be annoying, right? We gotta push them aside, not let them kind of derail us, and we have to focus on the next kind of trend that could happen. And I think that next one could be on the CAD. Mentioned that I hope yesterday already, if not 100% sure, but I think I did in the webinar yesterday with Admiral Markets. And I'm in the dollar CAD and pound CAD. Now, let me tell you that I got out of the dollar CAD a bit early, but was looking for a new breakout candle to appear. And if that would happen, I would take it again. So the other option was to move to stop loss here, which would have been a little bit better. I would have stayed in the trade without necessarily exiting, but okay, fine. So I think dollar CAD weakness is looking to be the next mover, I think, personally. And I think that pound CAD is looking, and the dollar CAD probably, pound CAD looking a little bit better in my view. Not that the pound dollar isn't that great of a spot, but did make that ABC we talked about yesterday was a range. This was a typical range trade from the S1 to the weekly pivot point to fill the gap. And I think during or after the webinar, the price did spike up for that ABC, or I'm not sure about that exactly when this happened, but did fill it up at this moment, that gap. And I think that at this moment it is at resistance. It's just pretty wacky at this moment. I think the main factor is the CAD weakness at this moment that I think should continue at this point. That's what I think at the moment. And there is still some yen weakness, of course. Dollar yen broke to the downside. That's also a significant event. And there was a good breakout approach. Maybe this candle. That's where my signal arrived. But if you're looking for the breakout candle, then this one would have been one as well. I'm still in the New Zealand yen, personally. But this dollar yen could have been an option too. Hit the 23.6 fib, kind of went below that. So I think that more yen weakness is possible too. Maybe this is probably just a retracement. So yen weakness, CAD weakness, I think, could be good things to keep an eye on. So just thinking out loud here, let's see. These pound, euro odd, euro New Zealand crosses, they did very well. I'm just not very big fan of pound odd and pound New Zealand upside, although I realize that they could move up as they are doing. Euro odd and euro New Zealand have just already moved so much that I'm still interested in the euro odd, but I am waiting for a retracement. So it's kind of like the euro dollar and yeah, euro odd are in the same boat in my view. Just so much momentum that I'm looking for a retracement continuation on those two. But I think that there could be some correction first. Maybe a fib like this makes sense, for instance. Looking for 38 to 23.6 fib could be good bouncing spots, I think. If price gets that deep, would be what I'm looking for. So I'm interested in euro dollar, euro odd upside, but just want to see a correction. First, I think the CADs, pound CAD, dollar CAD, I think are the next one. Look like that they would be the next one to move. And yen weakness is probably something to keep an eye on. But the question is which yen could be better. And I think maybe odd yen and New Zealand yen. New Zealand yen, I'm already in New Zealand yen because Aussie dollar and the Kiwi dollar remain quite bearish. And I did short these two pairs. I didn't grab much pips out of these two, unfortunately, uh, because of the fact that Aussie and Kiwi were just very slow movers. And I eventually got just impatient with them. Well, not impatient. I was just that's my tactic. That's my approach. If it takes too long, I do move it to break even. So it just takes so long for these to develop that I moved it to break or not bit into profit with the Kiwi at least. And but I got hit, and it might continue in this case. But that's one of the risks sometimes with moving stop losses. In this case, I just thought it was way so slow, this Kiwi, in my view, that I thought maybe moving to break even made sense. So therefore, Aussie and New Zealand still looking weak. If the yen weakness kicks in again, Aussie, New Zealand yen could be good ones, I think, for that downside. Just like euro odd and euro dollar, to me, look good for upside. Um, let's take a look at those pairs. One second. New Zealand yen is in a nice little trend channel here. There we go. I'm already in this trade. I don't see any setup right here though, personally, with the bottom so close. But I do think that if it breaks, yeah, I think it would have to probably make some flag and then break again, or break and then a flag on the outer chart and continue. Maybe odd yen or something. Let's take a look. Odd yen broke already, unfortunately. It was a trade I was into. One of the trades that I also got break even, unfortunately. This is a couple of bad examples where I didn't make pips despite the fact that the trade went my way. Typically, I don't lose patience that quickly, but with this odd yen, I moved it probably a little bit too soon. After it spiked up here, got hit, and then it still moved down nicely. So probably would have to see. I would probably have to see some flag at this moment on the outer chart probably, and a continuation. That does look good to me for follow through. Yeah, pullback and continuation, I would say. And the minus 61.8 target is close by, so we might get that flag. Flag continuation. Pound CAD. And then we'll take a look at CAD yen. All right, here, flag continuation. So this is on its way to the upside, I think. Let's take a look at that CAD yen. CAD yen also pretty good probability setup. If we get a good daily candle close here, then in that case, it is looking good. Sorry, with a bounce at resistance. Moreover, a break below support with a good daily candle like this. But the candle closing the low, I think, is important. With such a volatility in this candle already, I think downside continuation is likely. All right, folks, I'm back. So daily candle close with the closing of the low, I think, would be a good signal, and that would, I think, indicate a good breakout potential and a pullback continuation. I think would make sense in that case. It's a pretty good hybrid, pretty good setup, I think, if we get this daily candle close. And there should be more CAD weakness, even against the yen. So although I do think that the yen is also weak, so I'm not sure if the CAD yen is necessarily the best, but it could continue to. I just think that both CAD and yen seem kind of weak with each other, so I think maybe odd and New Zealand yen look a bit, but let's take a look at the daily candle, maybe. And odd yen daily candle. Here too, I think we could use the same tactic. Just put a fib on this daily candle, wait for a retracement of that fib, and continuation could happen on the odd yen and New Zealand yen. You know, it could happen too on the CAD yen. Let's just wait for these daily candles to close, and I think there could be good info with regard to that. And great, Dushan. That's perfect. I'm happy you joined me with that targeting 77.19. Yes, makes sense. I think I have something similar. Let me check. I have 77.50, 54 as the very first target. That has been hit. 76.60 after that. But 77.19 could make sense as an intermedium, like a target in between, indeed. Let's see. Anyhow, CAD. So yeah, let's take a look at these daily candle closes. It makes sense. I think that CAD is going to weaken. I think that's why I was talking about the CAD being, I think, the next trend. But maybe pound CAD could look a little bit better. I mean, I'm not sure. Let's take a look at pound yen. Difficult read. Making kind of a falling wedge at this moment. See that? Very, very difficult pattern. Falling wedge is not a high probability pattern. In fact, that's one of the patterns that's very difficult to trade in my view. So not all patterns are necessarily high probability. I do think that momentum patterns are typically better. So I think the pattern itself, though, I wouldn't want to trade this pattern because I don't think it's a high probability. Not necessarily do you need a high probability to trade a pattern to trade at all, but this webinar is focused on high probability setups, so that's why. But I think the pound has an edge here, so I would probably lean towards pound CAD versus CAD yen. But it is pretty simple, right? What we can do is just keep an eye on these daily candles, and that will give a lot of info to us. And one of those things would be pound CAD. And if you're not in that trade, this daily candle would also give us some information about that. I'm already in this, so maybe if you're not in CAD weakness trades already, then then it could make sense to wait for this daily candle to close, maybe look for some flag on the hourly chart, try to put a fib on this daily candle and wait for retracement halfway or so with the stop loss below this candle. But much also depends on the candle close. That will be always the most direct info that we can get, and always so useful, isn't it? Those candle closes. With regard to, and good to see you both, by the way, in this webinar. I will write back shortly. A bit busy last 2, 3 weeks, 4 weeks, but should be getting better. I want to do a little bit more intraday trading actually next week. I hope I will manage. I was really looking more at 4-hour time frames, which is a little bit easier to manage with the time. But I hope I will have time again next week to do a bit of intraday trading again. Gold, yes. Let's see, weekly chart. Yeah, no problem, Angel, no problem at all. Let's see. I think my view, my bias at this moment is this A, B. So I'm expecting a C here, or WXY. So at least another third leg I'm expecting, like this. But this second leg might go up to indeed 1320, or even 1335 indeed, before falling, in my view, down to around here, I would say. So that's my view for the moment. So indeed, a bounce at 1320 makes sense to the downside, in my view. That is invalidated if price breaks below above this top. All right. Any other currency or instruments in mind? Maybe we could take a look at gold. Sorry, silver. Excuse me. Let's take a look at silver. Not a high probability setup, is it? With so many months going sideways. But ultimately, I do think bullishness, correction, bullishness. So I do think that is a pattern that could play out soon. falling wedge here. Like this. And break of the falling wedge plus sideways movement. So a breakout candle above that resistance does look good. But with gold maybe still making a correction, that could still take some time. Yeah, same like gold indeed. Gold also bullish in the long term indeed. Just waiting for price to get here, and I'll be looking to buy. I'm not a big fan of trading. I mean, I'm not a big fan. This is not the right way. I mean, I'm not an active trader of gold, but if it gets down here, I will be looking to trade that, and I'm gonna actually think about holding it actually for targets up in here. In fact, because I think that personally, this correction is over. There's a wedge here, and we had a break of that. This is, to me, this is a break. This is ABC, and there should be a lot of momentum when this like finishes. Not maybe right away, but timing is always so difficult. Especially with these kind of weekly charts. You know, before we get this momentum, it could be 3 years from now, 2 years from now. But I think within a 5 year window, maybe it's too wide, but okay, that there's a very good chance it's going to break this top. 5 years would be 60 months. Yeah, it makes sense, I think, personally. Now, of course, next year price might, I'm not sure how it will go. It could be earlier, right? It could be that maybe end of this year it's somewhere here, then beginning of this year it makes a downside, maybe mid half way next year it starts moving up. End of this year it still makes a correction, then beginning 2009 it starts moving up. Correction for the rest of 2019, 2020, it starts to move up again. And I don't know, maybe 2020 it's breaking the stop or something like that. I don't know, this timing with these big moves, it can take time. And then, but once this gold starts to climb, then it could speed up because potentially, right? Because these things then can start to get kind of like a snowball that's turning into a bigger avalanche or something like that, or a mini or a bigger snowball, right? It kind of picks up steam. So that could happen. Could happen here too. So let's see. Same with silver should follow. I'm not sure how much silver will follow. I mean, might be a bit less than gold. Silver retraced deeper, of course, than gold. 78.6 50 pip for gold. So a little bit more demand from that point of view for gold. So gold, I think, probably will win a little bit compared to that silver, but silver should follow typically. Oh yeah, oil. There we go. Oil had a strong day, pretty good volatility candle. So just based on that, maybe some retracement in the near future, but ultimately I think continuation is likely. I don't see any particular support that could stand in the way necessarily, I would say, until maybe this top here. Well, of course, there's this top, but that's where price stops right here, actually. So there could be a little bit of a bounce here, but then I would expect to break out to the next level. There we go. Yeah. So, any questions perhaps for me with regard to fibs? So definitely when you see momentum patterns, fib is good to place on it and look for a retracement continuation. Unless of course there are some higher time frame support resistance, some pattern divergence pattern. You gotta always keep an eye on the larger structure and understand timing as well. Sometimes things are set up, but the timing is not there yet. Like the CAD, maybe you saw the CAD weakness already earlier this week, but we first had New Zealand weakness, then we went into Euro strength. Now we may be getting CAD weakness. So if would have been maybe better to wait a little bit for so timing is a thing. Patterns on higher time frames, support and resistance are things to keep an eye on as well, um, besides just classical technicals on one time frame using momentum patterns and fibs. But do provide a lot of info, I think, already, just like that, and give us good indications of potential trades, like maybe, for instance, I don't know, maybe, well, Euro New Zealand, for instance, had a little bit of a falling wedge like this. That was a pattern, for instance. The Euro odd had a break also of a falling wedge, and had a bull flag after that. So these are all things, right? Break the flag, break of this, break of the wedge, break of the flag, and price probably went to 50 fib. So these are all very useful things to find high probability setups. All right, so definitely good tips there, I think, with regard to that. But if you're looking for other methods, then once again, just check out the YouTube channel, because there we went through a whole list of things that I think are good. This is just two of them, but there you'll find more. I think it was last week or 2 weeks ago. All right. So thank you, Angel. I hope that you're going to rebound quickly and keep everyone has kind of these experiences. I think it just makes us better and tougher. So it's something you'll definitely learn from. I'm sure about that. I definitely I had it too, and I also learned a lot from it. So I think a lot of traders go through this. Not necessarily everyone, but definitely a good amount of traders. Believe me. And if you haven't gone through it, then you've never felt that. So you're kind of vulnerable for that. I'm not saying you have to go through that. Don't get me wrong. Don't necessarily have to go through that, but it is once you've gone through it, I think it helps kind of build some resilience against doing that again. I know it's a tough, yeah, it's not a pleasant, way to grow as a trader. I know, but we gotta pull out the kind of positive stuff out of these things. And I definitely know that from this point of view, it is forms you as a trader, and that can be a benefit in the future. All right, so check out the plugin. All right, MetaTrader Supreme Edition plugin. A lot of extra features. You scroll down if you're curious what they are. You saw a few of them already in this webinar. Mini terminal, trade terminal, tick chart trader, indicator package, stuff like that. All right, trading simulator, mini charts, on and on. And but there's a lot more stuff, of course. Open a demo account, a real account. Check out our analytics and stuff like that. All right. We'll be back tomorrow, and then tonight we're going to take a look at fiscal and monetary policy. I know a little bit of theory, but still good, for specifically for trading. Whether you're trading commodities, CFDs, forex, stock indices. It's just it's good to know these things for the long term, how they play out, how central banks, what kind of influence, how they have with their decisions, and stuff like that. So we'll be diving into that. And Dushan says that he wishes you, Angel, quick recovery and uses a slogan or how do you say it? Like wisdom sentence saying, "What doesn't kill you makes you better." And I, we have the same in Holland actually. I'm Dutch myself, well half Dutch, half Czech maybe, and you know we have the same in Holland. So it is something that multiple countries use. So and it's in some cases it's true indeed. All right. So that's from Dushan, and we'll wish you good trading and see you all tomorrow. Cheers.